Welcome back to Squawk Box. Grocery giant Kroger just out with fourth quarter earnings. As far as the top and bottom line, a little bit light on both. Also weaker than expected guidance for the full year. The numbers come at a time when Amazon's making a push into more brick and mortar grocery stores. Joining us now, Michael Schlotman, CFO of Kroger, member of the CNBC Global CFO Council. What were the headwinds in this quarter? There have been a few recently, Mike. It's tough to navigate some of these waters, I guess, but what was it in the fourth quarter?
Well, we actually delivered 1.9% identical sales in the fourth quarter, which was slightly ahead of what the consensus estimate was. You know, there's some chatter out there that we missed the top line revenue. The fact of the matter is that the retail price of fuel was about a dime a gallon cheaper this year than last year, and we sell a lot of fuel every quarter, and that's all of the difference in the sale, the total revenue number. I can tell you that margin per gallon on fuel was significantly stronger in the quarter, the highest we've ever had. Great contributor to the bottom line. When you look at our bottom line, $2.11 for the year, our original guide for the year was $1.95 to $2.15. We made that $2 to $2.15 in the first quarter, and to deliver at the high end of that in the first year of a 3-year plan that we called Restock Kroger, we feel we've built a great foundation this year to leverage off of in 2019 and 20 to deliver on our financial commitments of Restock Kroger.
Mike, can you compete, do you think, with digital on a digital level? You saw Walmart. We've worried about their response to their digital competitors, and yet they seem to, you know, if you can't beat them, join them. And they've had some great numbers based on sort of, you know, doing the same type of thing. Is Kroger going to be able to compete that way, would you say?
Absolutely, Joe. We've been working on that for quite a while. You know, over 90% of our customers today have access either to pickup or delivery. We would expect that to be at 100% by this time next year. With our launch of Kroger Ship, that we made some investments in the fourth quarter, which was part of the margin erosion we saw in the fourth quarter, we would expect to be able to serve 100% of the United States by this time next year through a Kroger Ship. So we feel we can do it. We feel we have the physical locations. 11 million people a day come through our stores on average. They live within 2 miles of one of our stores, so we're already very convenient to them. We do as good a job as anybody of getting product close to their house in an efficient and economical manner. And for us, it literally is solving the last mile, because a lot of those people and a lot of that fulfillment happens out of our stores. So we're very bullish on our digital business. We continue to invest in it, opened up some warehouses in the fourth quarter to help that even more, which again, those startup costs go into gross profit margin, which was part of the erosion of gross profit margin in the fourth quarter. But startups, one-time events, and we'll be able to build off of having those facilities as we go forward. So we're very optimistic about that business.
Tough day in terms of pre-market trading here. Do you see any cost pressures at this point? And do you think the Fed is underestimating or overestimating what real core inflation is right now, Mike, based on what you see?
Yeah, there's a little bit of food inflation out there. It hasn't all been passed on. There was a little more inflation at cost than there was at retail. It's still fairly benign. If you look at everything without pharmacy, it was less than 1%. When you throw pharmacy in, it was a little more than that. But when you look at the full book of business, it continues to be a fairly benign environment. There's a lot of chatter out there, CPG companies raising prices, but you know, we've been doing a great job of negotiating cost of goods savings, and it's a great weapon for our corporate brands at that point in time, because they have a great cost structure and a great price for our customers.